A traditional loan is when you are accessing capital from a bank, a credit union, SBA backed programs, a CDFI, online lenders. All of those entities are going to provide you access to capital in the form of a loan, right? But what are some of the key features that you need to have in order to be approved for a loan that you're moving forward in this direction?
Well, for a traditional lender, the most critical thing is they will always look at your credit because they want
So,
to determine whether you are credit worthy and will be in a position to pay that loan back. So they're going to pull your credit to determine your credit worthiness, and then they are going to look for your income. Where or how are you going to be able to repay us, right? So
mhm.
income has to be of a certain amount to be able to get a certain amount of money, right? It's very unlikely that if your income is 20,000, you're going to get a loan for 1 million, right? So they're going to gauge your income versus how much you are even requesting for and then tell you if you qualify. And that is a process that happens, and it takes time. It's not, I've never heard of that happening in a day or two. So it does take time. You have to kind of be, try and do it prior to you actually needing those funds, just to give some time to the lenders to be able to do all the paperwork that's needed. And there is paperwork that you fill out so that they can, rate you, examine your finances so that they can make a decision as to whether you can qualify for some type of funding.
No, that's great. And let me just reiterate what you just said, but I would add on another one or two.
Hmm.
Credit check required, income verification, debt to income ratio review, fixed payment schedule, and approval process. If you miss a payment, penalties and personal credit damage. Are all
Mm.
of those aspects or characteristics of a traditional loan?
Yeah.
But also, in addition to that, you must qualify for the loan, right? The bank owns the approval. The bank gets to set the terms. The underwriting is based on the risk to the bank. And after having gone through all of that, right, supplying all of that information, at the end of the day, the bank can say no. And you have to start all over again, right? Just
Yeah.
because a traditional loan is going to be always be based off of your past performance. Always. It's always based off of your past performance.
And many times you also need to show some type of collateral to say, hey, if I'm not able to make this payment, I do have some type of assets that I can use as collateral.
Absolutely. Now we know what happens on the traditional loan side of the ledger. Let's pivot and have a conversation about what is a policy loan, right? We love to start out with definition. A policy loan, just so that nothing can be misconstrued, a policy loan is a loan taking against the cash value of a properly structured whole life insurance policy. So basically, you are borrowing against your own asset, which then talks to the conversation of collateral. What else would you add, Eunice?
Yeah, I think what you mentioned is very important because a lot of times I hear people say, why would I want to take a loan of my own money? Why shouldn't I just take it? But you are actually taking a loan against the insurance provider. Your policy, that death benefit serves as collateral. So the insurance policy uses that death benefit or your policy as collateral, knowing that in the event or if you passed on and you still had that outstanding loan, your death benefit can pay off that loan.
Absolutely. But there
Yeah.
are some key features and advantages to going with the policy loan versus going with the traditional loan. You want to cover some of those? So let's talk
Yeah.
about it. No
The
credit
first
check.
the first one will be the credit check. I think a lot of people, we all know we work hard to make sure that we have good credit. And you know that every time you are requesting for some type of credit, they run your credit. And whenever that happens, oftentimes your credit takes a bit of a hit, right? So with a loan from your policy, they do not run no credit on you. No credit check, so you don't run into any possibilities of your credit taking a hit because you just tried to get a loan from your policy. No credit hit. The next thing that another feature is that unlike with a traditional loan, you do not have to show your proof of income. You do not have to worry about debt to income ratios. Nobody's going to look at that.
Hmm.
So that means that there is no income verification that's going to be required on your end, right? And on top of that, there is no prepayment plan that is defined for you and that you have to follow. And what that means is that you have access to this money, and the insurance provider is not going to tell you, we want you to pay us every month, pay us X amount at this interest rate, things of that sort. So it is really up to you how you want to structure the repayment. It is not defined for you. So those are
No.
the three that they're not the only ones, but those are the three that I wanted to kind of address. I know there's other ones that you may want to also mention too.
Well, let's just reiterate what you just said. No credit check when it comes to a
Mhm.
policy loan. No income verification. And while there is an application, there is no approval process, right? There
And just to
is,
jump onto that, actually, it's not even an application. It is, I want to look at it as an administrative forms that you fill out just so that the insurance provider knows that you're looking for these funds. So they're going
hmm,
to keep that documentation to show that you are the one who actually requested for these funds and how much you are requesting for. So I don't want to look at it as an application because an application you're saying it can be rejected or approved, but
yeah,
you're just filling out administrative paperwork. Yeah. Mhm.
administrative paperwork. But the part that I was clicking on is that there is no approval process. There is an application, rather an administrative form that gets completed,
Yeah.
but there is no approval process.
Mhm.
And for a business owner where, cash flow is sometimes hit or miss, there is no required repayment schedule. So the business owner actually has that flexibility, right?
Mhm.
And after completing the process, the funds are usually available within days and the policy remains in force. Like literally, when we read the Becoming Your Own Bank, I was like, this was the best thing since sliced bread, right? Because at the end of the day, now I am insured, right?
Mhm.
And the borrowing is against me. The borrowing is against the policy's cash value from the insurance company, but the collateral is the policy in and of itself.
Yes.
So, why does this make all the difference? Right? If your policy is structured correctly, right, the cash value doesn't take a hit when you're taking a loan. So the cash value is going to be continuing to grow, right? Yes, there will be interest charged against whatever that loan amount is. However, the interest rate is usually going to be lower than what you would receive from a traditional bank with a regular personal or business loan, right?
Yes.
But there is one caveat because there is no purple unicorns, as they say.
Mhm.
The loan must be managed properly because if it isn't managed properly, it can reduce the death benefit if it is not managed properly, right? So at the end of the day, policy loans are based on collateral and not credit worthiness. There is no approval process. Whatever the cash value is, that is what you have access to. I don't really see that there is a difference, but let's put this side by side, right? Let's put this side by side, right?
Mhm.
A traditional loan is qualification based. A policy loan is ownership based. It's pretty clear to me. Speed. A traditional loan can sometimes takes weeks, if not months. Where a policy loan, there can be funds deposited into your account in days.
Typically, I've seen 2 days, but 3 to 5 days, you have the funds.
The next one is credit impact, right?
Mm.
A
Yeah.
traditional loan is going to have an impact on your personal credit score, your FICO, whereas a policy loan has no credit reporting. It's just an agreement between you and the insurance company, right?
Mhm.
Repayment structure. This is probably going to be the most critical thing for a small business owner, right? A traditional loan has a required monthly payment, whereas a policy loan is flexible, yet it must be managed properly.
And I want us
Last,
to emphasize that it must be managed properly because you can take that loan out,
hmm,
even though you don't necessarily have to pay it back. You have to think about if you do not pay it back, it means that it will reduce the death benefit. And not only that, it means that the next time you need other funds, now you can't go back there because you've taken out, but you have not put anything back.
yeah, one of the things that R. Nelson Nash spoke about in the book was the fact that if you own a grocery store, you cannot keep taking food out of the back door. Otherwise, the business is going to go out of business.
Mm-hmm.
You can't keep stealing food from yourself, right?
Yep.
So let's talk about it. When does it make sense to go with a traditional loan versus going with a policy loan, right? I got 4 items here. You need large capital and don't have cash value, right? You want lower rates sometimes, but that's always going to be dependent upon your credit worthiness and your score. You're building business credit, so that means that you are in startup phase and your business doesn't yet have its own credit profile. Or if you do have an existing high 700 and above credit score, you can easily qualify for that traditional loan. Eunice, anything to add?
No, I think that's yeah.
So let's then flip the coin on its head. When does a policy loan make sense? A policy loan makes sense when you need speed, privacy, flexibility, right? And
Mhm.
you know that it is not going to impact your DTI, i.e., credit utilization, right? But you're thinking about this from 2 perspectives. The first perspective is you are saying, I am giving my business access to an additional source of capital. Number one, you are, in addition to giving your business additional access to capital, you are protecting your family, your business, should anything happen to you where you're no longer able to be involved in the managing of the business, right? Those are the perfect reasons why, right? Those are the perfect reasons why I believe that you should definitely look into having a policy on yourself and all of the key persons in your business, right? So traditional loans, you can use those for finance transactions, right? Policy loans, you leverage those for finance control. There's a big difference. There's a big difference. And I'm hopeful and I'm optimistic that this conversation that we're having today resonates with our community, because that's the conversation that we've been trying to have for a long time, right? Anything to add, Eunice?
Well, I guess the last thing, which is what we regularly mention when we do come on online, also is that, remember with your policy, of course, it depends on the insurance provider, right? However, when you do have that access to cash, when you do have that cash, when you've taken a loan on that cash, when the insurance provider declares a dividend, your dividend is still calculated based off the entire amount. They do not pull out the money that you have taken as a loan. If you had 20,000 in there and you took out a loan of 15,000, your dividend is still based on that 20,000 versus the 5,000 that is still remaining. Now, there is no other mode medium out there that I am aware of that allows me to do something like that. I can literally pull money out, go and use that money for whatever needs I have. However, I'll still get my dividend as if I do not have that money or that loan out. If that is not, something that entices or intrigues you as a business owner, or even just as an individual, then I don't know what else. Because to me, that when I learned of that, I thought this is powerful. This is something that is worth looking into.
Totally, totally, totally agree.